If you're a trader on Robinhood, this video is for you. What they didn't tell you when you opened your Robinhood account, more than 9 out of 10 active traders, they never make it. They never become consistently profitable. So tonight, I'm not talking about trading. I'm not talking about some new meme coin for you to gamble on. I'm going to show you the real DeFi position that I opened just today on Robinhood's brand new blockchain. And that position started paying me the second it went live. So there's no charts to stare at like you do with trading. There's no nailing the perfect entry and the perfect exit. I just sit there and collect the fees. I've been running these liquidity positions for years now, and the money that I used to fund this new position today, I didn't even have to sell anything to get it. I borrowed that capital against my Bitcoin. I borrowed against my ETH. I don't sell my assets. I borrow against my assets. And by the way, the interest rate I'm paying on those loans, it's about half of what the big lenders charge. You might have heard of Let-in or Figure, where you can borrow against your Bitcoin. We pay less than half the rate. Now, I can't promise you that these liquidity positions are guaranteed to win. There's nothing guaranteed in markets, but it's definitely, I can tell you this definitively, providing liquidity is way easier and much more consistent than trying to trade stocks and options. As liquidity providers, we get paid when other people trade. Okay, so with all of that being said, the big new blockchain on the scene is the Robinhood Chain. And this is not going to be another, there's a lot of hype videos out there right now about Robinhood Chain, talking about new meme coins that you can ape into. We don't do that here. We're going to provide liquidity. We're not going to gamble on meme coins, and we're going to earn fees every time people trade ETH and USDG. So USDG is the stable coin on the Robinhood blockchain. We don't use USDC over here. We use USDG. It's Robinhood's own stable coin. And we don't have to pick a winning meme coin. Those things fail way more often than they succeed. Why is Robinhood so great for liquidity providers? Well, this chain has only been open, I think, about 7 or 8 days now, maybe 10 days, and it came out swinging. So tons of volume in the first week of this new blockchain. This is an EVM blockchain, by the way. So it's fully compatible with your Aave wallet, which is the preferred app that we use for everything EVM. More than 4 million transactions in the first week and a massive uptick. Lots of capital flooding onto this blockchain. And all of these transactions on the chain, there's a gas fee. Everybody needs Ether to participate. That's why we're providing liquidity for ETH rather than some meme coin where you're going to end up holding the bag as that thing drops 99%. We don't provide liquidity for meme coins. We don't even really touch meme coins. This is more of the, less of the speculation and more of the picks and shovels type of strategy for DeFi, for blockchain. Massive daily volume, flipped and did higher, better volume than Hyperliquid. So really impressive out of the gate for Robinhood Chain. And again, we're not messing around with speculating. There's apparently the hottest meme coin is Cash Cat. I couldn't care less about meme coins. What I care about is transaction volume. I care about active wallets. I care about TVL and trading volume that's happening in those tokens that I do care about. I don't care about trading on meme coins. I care about trading on USDG and ETH. So I'll show you this liquidity position in a moment. When we provide liquidity, it's like we're running the money exchange booth at the airport, right? Where you go to the airport in a different country and you want to trade your dollars or your euros into the local currency. And that little booth in the airport, they take a fee every time they trade between one currency and another. It works the same way on a decentralized exchange. As liquidity providers, we get to receive the fees every time other people swap back and forth between these two tokens. And again, I'm interested in blue chip assets. I am not trying to speculate on meme coins here. So the new Robinhood blockchain, it's actually a layer 2 blockchain. It's within the Ethereum family, and the transactions on this layer 2 blockchain, eventually they get rolled up and they get posted and published and settled on the main Ethereum blockchain, the Ethereum mainnet blockchain. So there's no Robinhood coin either. There's just Ether, which is your gas fee. It's also the main form of collateral. It's also the coin that's used to stake and secure the blockchain. So ETH keeps growing. And by the way, we can look at the charts. ETH has been massively outperforming pretty much everything else, but it's definitely been outperforming Bitcoin for the last several days. So I'm going to show you my position. I opened it up between ETH and USDG, and I'm not betting on any meme coins over here. So what happens, the logistics, the mechanics of these liquidity positions, I deposit ETH and USDG. That's going to be hard to say because I'm so used to saying USDC. I deposit those two tokens into the pool. In my position, I become a market maker. I'm making the market for other people to trade in and out of. So every swap in that pool, the trader pays a fee and I get a part of that as one of the liquidity providers in the pool. Now, that's a key difference with these liquidity positions compared to trading. And I don't care if you're day trading or scalping or swing trading. And by the way, I've done all of that. I've traded stocks, I've traded options, I've traded futures, everything else. The difference with trading and this, we get paid immediately. So the moment I opened this position, I started to generate fees from the trading activity from other people trading in and out of these tokens. One little wrinkle here. It is possible that the trading is one-sided. So if traders are mostly buying ETH, my liquidity position is providing the liquidity. It's providing the other side of that trade. And so as traders are buying ETH, my liquidity position is selling ETH to the traders. Now, if the price is pumping, I'm not participating very much in that because every time it goes a little higher, there goes a little bit more of my ETH out of my position. And when the price reaches the top of my range, now all my ETH is gone. It's all been sold off to the traders. And we'll look at my range because that was part of what I had to set up today when I opened this liquidity position. I had to decide where I want my range. Where do I want the top? Where do I want the bottom? Where do I think the price of ETH is going to spend or going to be over the next days and weeks? Okay, so we'll look at that as well. But if the price just massively pumps higher, all my ETH is gone. And as soon as I've fully converted into USDG, I'm no longer participating in that rally, right? So your upside is capped. The point of a liquidity position is not to capture price appreciation. It's to capture fees. This is a cash machine. It generates cash while the price is inside your range. But that's also why I borrowed the money to fund this position. So I didn't sell my ETH. I didn't sell my Bitcoin. I borrowed against it. And I put that borrowed capital into the position. So I'm generating cash. And if we get a massive rally, and we've already had a really good rally, but if we get a massive rally and it goes outside the top of my position, my range, I no longer earn fees on that, but at least all of my spot assets, I never sold them. I'm riding that wave higher, right? So I'm still capturing all of that price appreciation with my spot assets. I never sold them. I just pledged them as collateral and borrowed against it. I smacked my microphone there. Sorry if that made a noise. I don't know if I want to go through the rest of this slide. I think I want to just get into the details here. This is the actual position. Now, you saw on the image on the thumbnail, I think it was 11 something in fees. And I just created that thumbnail, I don't know, 45 minutes ago or so, maybe an hour ago. So the fees keep coming in. And the APR, now, this is a little bit of a caveat. This is not necessarily consistent. And in fact, as we talk about this, you'll see this number go up or down. Just a moment ago, right before I started the stream, it was reading 700 something percent. Earlier, it was 609. Now it's 642. It'll probably change again in the next few minutes. So this is not a consistent number. It's not fixed. It's variable, and it depends on volume. And that's why I decided today to move my liquidity position to this new blockchain. There's a ton of new fresh volume, new assets being bridged to this chain, new wallets coming into the ecosystem here on Robinhood Chain. There's Robinhood Chain? Robinhood Chain. I'm just going to say RC. No, I'm not. But that's how I abbreviated in our Telegram group. So there's so much activity, so much volume coming into this blockchain that rather than provide ETH USDC over on Base, which is no slouch, I'm usually getting somewhere between 60 to maybe 110, 120% APR over there. Not bad, but there's so much more volume over here now that this is where I put my liquidity position. It's the same asset. It's still ETH. It's ETH on Base. It's ETH on Robinhood Chain. It's ETH on Arbitrum. It's ETH on Ethereum mainnet. Right? It's the same asset. It's the same price, but the volume is what I'm after. Okay. So this is, I don't know exactly what's behind this number. I believe that Uniswap takes some kind of running average or time-weighted average. Maybe it looks at the last 30 minutes, maybe the last 60 minutes. I don't really know exactly what it looks at, but it's basing this APR off of what kind of fees have been generated lately in the last X number of minutes. Okay. So what I like to do, and this will be just a quick plug for our app, is we've built this fee tracker. So this fee tracker in our overseas DeFi app, this takes the place of all those spreadsheets. If you've done DeFi, if you've provided liquidity before, you're familiar probably with all of the spreadsheets and the formulas, and you can figure out your average yield on these positions. Maybe you don't even care. Maybe you don't even track it. I'm a detail-oriented guy, and I used to have all of my data on spreadsheets, and then we built this fee tracker app built inside of our portfolio tracker app, where this does all the math for you and all the spreadsheets become obsolete. So let me show you. I don't have the new Robinhood Chain position on this because this system only works with EVM, it only works with the SWI blockchain, the Ethereum mainnet, Base, Arbitrum, and BNB. That's the 5 blockchains that connect to this app, so far. However, Robinhood Chain is not far behind, right? It's another EVM blockchain. That's Ethereum Virtual Machine. It's the exact same technology as Arbitrum. It's literally a fork of the Arbitrum tech stack. So it won't be difficult for us to do another quick upgrade to this app and we'll get the Robinhood Chain data in here in terms of the fee tracker. But what I wanted to point out is this will give you a detailed timeline and a table of all the different events that happened in the lifespan of this liquidity position. So here's where I opened this position. This is on Venice, which I'm bullish on the Venice token. That's a topic for a whole other video. But this is providing liquidity on the base blockchain for Venice/USDC. You can see I opened the position. It's been almost a month. June 19th is when I opened this position with about $6,000 in capital, and I started collecting my fees pretty much every day. Sometimes it's 2 days between fee collections. No big deal. And you can see the APR that this has been earning. Each of these fee events has its own event APR. What was the APR that you earned since the last fee collection? And then this one is I call it the batting average. So it just computes the average yield over time. It uses a time-weighted average balance of the position. You can add more funds, you can withdraw funds, and this does all of the math, including those different changes in the running balance. That's why it has this running equity column right here. And you can see on this position, it got really juicy there at the end of June. I was having some big fee collections there. That one was crazy. And then it kind of slowed down. It was still strong in early July. But here recently, it's been dropping off. Now, that's for two reasons. Well, that's for one main reason, really. Let's look at the Venice chart real quick. I'm getting off on a tangent, but that's okay. That's just how I roll. If we look at the Venice chart, let's look at that's an hourly chart. You can see here, the price dropped and it escaped my range. So again, as soon as the price escapes your range, these are concentrated liquidity positions, which gives us the ability to concentrate our capital into a specific range of price. But if the price escapes that range, you stop earning the fees. And so what we saw here just recently in the last few days, been a little bit better here recently, but there was a lot of price action that I missed. It dropped. I was looking for it to bounce. I didn't necessarily want to move my range lower where it could possibly sell the token at a lower price than where I bought in. But this price action that was not captured by my range, that didn't generate fees. So the fee income has been a little bit lower. Plus, I mean, you can see here that my range is much, much wider than it has to be. And the reason for that is because I'm expecting this token to bounce soon. And if and when it does go ripping back up here to $15, I want to sell that token. I want my liquidity position to sell that token all the way up. I don't want to cap my selling down here somewhere, right? If I cap that position or if I move that range down to here, then as soon as the price escapes the top of that range, I'm done. All my triple V tokens are gone. Let me undo that change. So the yield is going to vary over time. The price will stay in your range. Sometimes it will escape your range. Any escape means you're not earning fees for however many hours it stays outside of your range, right? Also, the volume ebbs and flows. Sometimes the volume is high, sometimes it drops off. Typically on the weekends, there's less volume and your APR will drop. So that's why I really like the app and the fee tracker. It just keeps all those numbers, keeps all the records there. Even if I move the range, if I use revert to move the range somewhere else, it keeps tracking it as one contiguous position. So that's the APR. So take it with a grain of salt. This will go up. It will go down. It won't necessarily last for another day. It might only last the next few hours. If other liquidity providers jump into this pool, Now they're getting a slice of the fees too. So more TVL means we're having to share the swap fees with other liquidity providers. Now let's talk about the lending part of this, because I think that's a very important. And I watch a lot of crypto and Bitcoin related podcasts on YouTube. I pretty much every day I do a little morning soak in the hot tub. I usually watch Anthony Pompliano or the Wolf of All Streets or Raoul Pal or whatever. And so often on these Bitcoin and crypto type of YouTube videos, they are advertising for borrowing money against your Bitcoin. And I always kind of cringe when I hear these ads, because they're touting an interest rate like, 8.99% APY or 9 point something percent. So in other words, there's these companies like Figure, like Ledin, where you can borrow against your Bitcoin, but the interest rate is relatively high. Let me show you what I'm paying over on Aave. And I forgot to bring over that dashboard, so I will have to also change my wallet. So right now I have my Ravi wallet tuned into my specific account for Robinhood. I created a brand new wallet address for the Robinhood chain, just in case something goes wonky. Here I'm going to show you my main base wallet. And here is the money that I'm currently borrowing. Now, usually in a bullish market, you're going to borrow strictly stable coins. We haven't had the most bullish of markets over the last 9 or 10 months. So I have a synthetic short position by borrowing a volatile asset like ETH. But here's the main point. So rather than 9 or almost 10% borrowing against your Bitcoin, I'm able to borrow against my Bitcoin and my ETH here at 4.18%. Again, this is another variable rate, so this will go up and down. I've seen it recently as high as maybe 4.3 something. This is the lowest I've seen it for a while, but it's usually somewhere between 4 and 4.5%. So literally half the rate when you borrow in DeFi. And guess what? This is what crypto was invented for, not Bitcoin. There is no such thing as DeFi in Bitcoin. The Bitcoin blockchain does one thing. You can send. You can send coins from one address to another. That's all you can do with the Bitcoin blockchain. Now, there's a couple of other minor functions, but that's pretty much it. You can send coins. On Ethereum or a layer 2 Ethereum blockchain like Base, you can do so much more, because these blockchains have smart contracts. All right. These have apps that are installed on the blockchain. Okay. And so what we're able to do is things like decentralized lending and borrowing, decentralized exchanges, liquidity provision, where we get to be the Coinbase and the Kraken. I think Coinbase made something like $4 billion in revenue last year, collecting trade fees from all the people trading crypto on Coinbase. In DeFi, we get to collect those fees. We get to tap into that multiple billion-dollar market. Okay. So how did I do this? We do have, let me bring up our YouTube channel, just, explore the Overseas DeFi YouTube channel. I'll bring up a link. Just explore that in your own time. But there is a specific video that I'm trying to get over here. There it is. All right, let me pop this over. Excuse me. I'm not a professional podcaster. That's another podcast I listen to a lot, the Jack Mallers show, Monday Mailbag Show. So this video right here, this one is going to take you step by step through the process. Okay. We even have a playlist. It's just 4 videos. It's called Copy This Portfolio. It's on our channel. Not my keto recipes. That's a private playlist. But this playlist right here, Copy My Portfolio. Stop that. Just 4 videos. This takes you through A to Z, the process. Purchasing crypto on a decentralized exchange and saving 99% on your Coinbase fees, and then actually taking custody. Hello, crypto was designed for self-custody, but almost no one does it. Almost everyone that buys crypto leaves it on the exchange. So this is going to show you how to take custody of your crypto, and then the very next video, how to borrow against that crypto for something around 4% interest. So that's how I started the day. I already had these borrowed funds, about $9,400 that I had ready to transfer over to the new Robinhood blockchain. That was completely borrowed money on which I'm paying about 4% interest. Okay, maybe a little bit less because you saw the interest rate on borrowing ETH is way lower. It's less than 2%. Okay, but anyway, I borrowed that money and I didn't have to sell my assets. Not selling your assets gives you 2 benefits. Number 1, there's no tax bill, right? If I loan my assets on a DeFi lending protocol, it's not a taxable event. I mean, I'm not a tax advisor, so don't, talk to your accountant and all that good stuff. All those disclaimers notwithstanding, if you don't sell something, it doesn't trigger a capital gains or loss event, right? So I'm just loaning my assets here. So that's the first benefit. There's no tax event. I don't sell, I lend my assets. The second benefit is I still get to participate in price appreciation. These assets are still mine, and they're still in coin form, right? I haven't put them into a liquidity position where it sells off early. These assets climb the chart. Every dollar of price appreciation, every increase in the price, I get that in terms of the price or the value of my collateral supply over here is appreciating with the market. So you don't give away your upside and you don't trigger a capital gain event. Now, once you have that collateral, you borrow against it. And this is a little tricky. Okay, you have to borrow safely. You have to make sure that you're not going to get liquidated. And I talk all about that in that video. I also recently did a live stream, I think it was last week, where I took you through another feature of our portfolio tracker, our app, right? So you have this lend borrow tab here, and you can dissect your lending and borrowing positions, and it does the math. It tells you what the liquidation price is for your assets, and you can simulate different events. So you can mess around with the prices. You can increase or decrease your loans or your collateral, all sorts of different stress testing that you can do on your lending and borrowing positions. So it's not trivial. I always say this, this isn't trivial what we're doing here, but it's not rocket science either. And we have these cool tools built into our app that are going to help you out with that. We also have a pretty awesome AI bot down here. This is not just a chat GPT instance. This AI is fully trained on everything that we do here at Overseas DeFi. Every open office hours call that we've had, all the Zoom workshops that we've done, all of the video lessons that we have, even these YouTube videos, all of that data is absorbed into our into our AI bot here. So it's very well informed on all the strategies and all the different things that we can do in DeFi. So tons of tools and ways to help you out on your DeFi journey here built into the app. So once I have that borrowed money, now that borrowed money was on the base blockchain. Well, some of it was on the Arbitrum blockchain, and I had to get my money actually over to the Arbitrum blockchain because they're currently, not yet anyway, there's no bridge between the base blockchain and the Robinhood chain. Maybe there never will be because the base blockchain is based on Coinbase, and Robinhood chain, of course, is based on the Robinhood platform brokerage. You know, so those two companies are kind of head-to-head competition. So I don't know, but it is possible to move your money from the Arbitrum blockchain over to the Robinhood chain. Okay, so the way I did that, and I'll give you guys the link for this. Where is it? Where is it? Bridge. So this is an Arbitrum bridge. I'm going to give you this link. I'll put this in the chat on the YouTubes. And what this is going to do is this is how you can transfer assets or move funds from the Arbitrum blockchain to the Robinhood chain. So that was my first step this morning. The fees are very low. It was 0.01% to bridge. I bridged over about 5 ETH. You can't do USDC. Usually when I'm bridging from one chain to another, I like to use USDC, or I like to use my Coinbase account. Coinbase doesn't allow you to withdraw to the Robinhood chain. Of course, maybe it will someday, but probably not. But that's how I usually like to bridge assets or transfer assets and coins from one blockchain to another. I usually go through Coinbase. Like I'll send USDC into my Coinbase from the base blockchain. And then once those USDC tokens are in my Coinbase account, I'll just withdraw them right back out. But when I withdraw, I'll choose the Arbitrum blockchain for the withdrawal. So that's how I typically like to bridge. That wasn't available to me today, this morning, as I was moving the assets over. So I did use this this bridge, but the fee was super low. So 0.01. You're going to receive 0.00998 on the other side. I did like 1 ETH at a time, and anyway, the bridge fee ended up being about 0.01%. So very inexpensive. And you just connect your wallet to this protocol. And if you have some ETH on Arbitrum, great. You can just bridge it right over. If you don't, well, then you'll need to get some ETH on the Arbitrum blockchain first. And again, that video that I showed you, the copy this portfolio playlist, video number 1 is going to show you how to take custody from Coinbase into whatever blockchain you're after, including Arbitrum. So that was the next step. I had the borrowed funds already. I had some on Base. I had some on Arbitrum already. Moved everything to Arbitrum and then bridged it to Robinhood. And then I did some swaps. So I like to do my swaps on 1 inch. Now you can do swapping one asset for another. You can do that on Uniswap. Uniswap is the original gangster when it comes to decentralized exchanges. They literally invented the decentralized exchange and the liquidity pool, where we're going to generate our cash flow. They invented it. So you can definitely do your swapping on Uniswap. I did my swaps on 1 inch because as a DEX aggregator, what 1 inch does is it routes your trade to whichever exchange is currently giving you the best rate. So it looks at multiple liquidity pools, multiple exchanges, and then routes your order to the best one. Okay, so I like to use 1inch. And once I had the ETH over there, I did need some USDG. I've never owned USDG until today, but that was the liquidity pool that I wanted to provide liquidity for. Here is Uniswap, and I've dialed this in. So I'm looking at the Explore Pools page, and I specifically chose just the Robinhood chain. Where'd it go? There it is. See, it's new, obviously. And then I did a text search because there's all kinds of pools here on Uniswap on the Robinhood chain. I knew I wanted to provide liquidity for ETH and USDG. Again, there's no USDC on this chain. You have to use the USDG, Robinhood's own stablecoin. But by the way, this stablecoin, this USDG, it's made by Paxos. And Paxos is a regulated US company in New York. It's tough to get harder regulations, more strict regulations than the state of New York. So Paxos backs each token with $1. So it's exactly 1-to-1, fully backed, fully regulated. So I think this is a quality stable coin. And I don't have any problem with it. It's just harder to say than USDC. That's my only problem. Guys, if you're watching live right now, I really appreciate you. Thank you guys for being here live. If you're watching the recorded version, thank you to you as well. If you're watching the recorded, this is going to be later on, obviously, but if you're watching the recorded video, please make sure to like the video. Leave a comment down below. And here's the most important one. Turn on those notifications, right? And then the next time I go live, you won't miss it. You can actually show up live. And the benefit of showing up live is no one's doing this tonight. But if you're trying to make your way in DeFi and you have a question, ask in the chat. Ask your question in the live chat. I've got a screen right here in front of me. I can see your chats. And I would be more than happy to address any questions or issues that you're having with DeFi. So, and you guys watching live, again, thank you. Make sure to like the video. You'll have to close out the chat, hit the thumbs up, and then you can come back into the chat if you want to. That would really help. Thank you. Okay, so I have the borrowed capital. I bridged it from Arbitrum to the new Robinhood chain, about 5 ETH that I bridged over, so around $9,300, $9,400. And then I knew, let's look at the chart. I knew that I knew that I wanted to be in range right from the get-go. I want to start collecting fees right away. But I also, let me turn something off here. I also am a technical analyst. I've been trading for more than 15 years. I don't really do much day trading anymore, not like I used to, because just DeFi is just so much easier and less stressful. And there's no sitting in front of these screens all day long. But I still do some trading, and I've been trading for more than 15 years, and I've always been a price action trader. So I'm a believer that all the information I need to trade the market is contained in what the price is showing on the chart, what the price is doing on the chart. So with that in mind, let's look at the recent price action. So I'm also a believer, and I'm a very, very amateur Elliott wave analyst. And so what we've seen recently, we've seen a nice rally. Let me turn off these ranges. We've seen a nice rally, and it came in the form of an Elliott wave impulsive structure. And it has really nice structure, including another thing I like to look at is the Fibonacci extensions of wave 1 anchored at wave 2 And so we saw a beautiful, strong wave 3, a wave 4 correction. And this move that we've had just in the last 12 hours or so, I think this is the tail end of the move. Doesn't mean we can't do it. In fact, we already did a few little wiggles higher, or one little wiggle higher, just in the last 2 hours, right? So it doesn't mean that the rally is for sure over. It just means it's a little bit long in the tooth, as they say. It's getting close to a completed pattern in terms of Elliott wave. Now, not everybody is a believer in Elliott wave market analysis, but I am. And we hit the 2.618 extension here on the fibs. So I'm going to turn those things off. My point is, in my opinion, this rally is getting pretty close to being done. Another fantastic session. Hey, thanks, Cat Gak. I appreciate you being here live. Yeah, and I recognize you from the last several weeks of my live streams and my videos. So you're one of the few. So congrats on being one of the very, very few people that actually try this. And I'm glad that you're having some success providing liquidity. After doing some of my own work based on these videos, I got these LP positions working. I signed up. Oh, nice. Okay, so I'm chatting with you on Thursday. Right on. Cool. That's so cool. I'll see you on Thursday then. So yeah, he signed up for our community. So we have an overseas DeFi community. It's $97 a month, no contract, cancel anytime. And you get that full app. You get a weekly private sort of Q&A session, Zoom call for that we do on Fridays for the community. You get the AI, you get a whole bunch of training videos, and you're in a community. So you get to chat with other people that are doing the same thing as you're doing and learning. So again, I put the link in the chat as well, pinned it, community.overseasdefi.com. Okay, so the Elliott wave structure, the Fibonacci extensions that we've seen on this latest rally, to me, tells me it's getting pretty high up there. Also, again, just based on basic technical analysis of the price action, we had this low that withstood the test of time for quite a while, and then we dropped below. And so I think there's a decent chance that if price can get back up to this level, there will be some resistance. Now, we did have a different level right there based on these lows over here, and then some little gyrations in this area, and these two highs right there, a bit of a double top right there. And you can see even just recently on Sunday night and Monday morning, once again, that level acted as resistance. Let me zoom in because this is an eye chart here. So important level here, and then just a few hours ago, we broke through that level. So we're getting high in the range. I do believe that we'll probably be range bound for another few weeks, maybe months. Now, that could be wrong. I'd be more than happy to have the chart just go up and to the right forevermore. But I have to be realistic. And after all of this bearish price action over the last 9 or 10 months, it takes a while for the market to build out that bottom and finally just consistently head higher and higher, day after day. So with all of that in mind, that the price is relatively high or fairly high right now, the probabilities in trading and providing liquidity and analyzing a chart like this, you never have certainty. You have to go with the probabilities. And what the probabilities to me are saying here is that price is more likely to go down from here than to go up. Now let's zoom in again and let's turn my range back on, because you'll be able to see exactly how I played this. So that's the position that I open, and that's the range that I designated on Uniswap. Again, this is a concentrated liquidity position, so we have to designate our specific range. And that's great because it allows us to put all that capital in one area of the chart, and we get a bigger portion of all the fees as long as the price is staying inside that range, because our capital is concentrated. It's a concentrated liquidity position, very, very high yield, as you know, as you saw. See now, wait, that's a different position. Let me go back. I'm going to switch back to the Robinhood account. Let's see. We'll just keep checking in with that liquidity position to see how the yield bounces around. Okay. Yeah. So another dollar came in while we were talking, and it's saying that the APR is. Again, I don't really trust this number. I need to see what the fees are, 7 days in a row, 30 days in a row, and I use that fee tracker app that we have to calculate the numbers and to figure out what the yield actually is. So the way I set this position up, and I'm going to zoom into a 15-minute chart. Oops. So I opened the position when the price was around 1870 or so. So notice where I put the top of my range, right up against that resistance level, potential resistance level. So if it does go higher, I think the rally is pretty much done. But like I said, we might get some wiggles higher. So I gave it some room to the upside. Okay, gave it some room to if the price keeps wanting to go up, well, then I had to load some ETH in the position, because what happens, if the price is going up, it means that traders are mostly buying ETH. And if traders are buying, my liquidity position does the opposite. So I need ETH in my position, in my deposit. I need that ETH there to sell to the traders as the price keeps going higher in my range. So when I opened this position, the price was about right there. And you can see I had to deposit. Let me draw something here. So this part of the deposit, this was the ETH. And then this was the USDG. All right, let me delete those. So it was somewhere around 70% USDG and about 30% ETH. All right. So I had bridged over 5 ETH. I ended up selling about 3.65. Yeah, I sold about 3.65 ETH, and I swapped that for USDG, and then I deposited those two assets into my position. By the way, I'm not going to go through the nitty-gritty details and all the individual steps, but if you want a video like that, we do have that playlist again. And this one right here is going to show you exactly how to set up a liquidity position on Uniswap, every single step from A to Z. Okay, so that is available to you. Or again, you can join the community. You get the live Q&A calls, the Zoom call on Friday. You get a bunch of training videos. You get a community where you can chat about this with other DeFi enthusiasts and all of that good stuff. Or the AI. You can chat with the AI too if it's 3 o'clock in the morning and you're trying to figure out how to do something. Lots of tools and lots of information available to you. So I'm going to delete these. I don't want this video to get too crazy long, but yeah, so that was the range that I set up. Like I said, I had 5 ETH, a little bit more than 5 ETH that I had bridged over. So I sold 6.65 of that for the USDG. So then I had ETH and USDG. I actually had to wrap my ETH. So there's a coin form of ETH and a token form of ETH. You need the token form to go into these liquidity positions. So I did have to use 1 inch to swap my, or to wrap my ETH. So I just traded ETH for wrapped ETH. Then I had the wrapped ETH and the USDC, loaded that, deposited that into the position. And that is what you can see right here. So far, so good. It's only been a few hours since I opened this position. So I'm sure more TVL will flood in because a lot of liquidity providers are going to see these numbers and start to salivate, and they're going to start bridging their capital over and setting up their positions like I did today. So I got a little bit of a jump on it. Hopefully it lasts with these high APRs for a little while. But still, I would definitely expect something on the order of at least maybe 80% APR on the position. It might be really high for the first day or two and then drop down to like 200%, and then a couple more days and it's down to 150, and then 118 or something. So it'll peel off there as more TVL comes into the pool, and I have to share those fees with more providers. But that is pretty much it. Unless there are any questions, I mean, that's the deal. And I don't want to sit there all day on Twitter and try to figure out which meme coin is going to hit. And by the way, you have to invest money in maybe 24 different meme coins, and 99% of those are just going to go to zero. And maybe once in a while you catch a winner. I don't want to mess with that. I want to do the consistent daily cash flow thing that these liquidity positions provide. And these are blue chip assets. USDG, it's a stable coin. So if my position gets converted to 100% USDG, no problem. I just now have a big bag of USDG. It's stablecoin. I can convert it to dollars and withdraw to my checking account and buy something in the real world. If I get converted the other way, so if the price drops and it goes all the way down to the bottom of my range, now I'm actually losing value because I deposited the money here. I bought ETH and put it there, and then I sold ETH at 1870 or so and put it as USDG down there. But if the price drops, right? So let's say over the next few days it drops down and hits kind of this, see this support level down here. See all that support right there? Then it got supported even a little bit higher. So I probably will end up being a little bit too wide on this range, but that's okay. The yield is still great. So if the price drops all the way down to the bottom of my range, this means that traders are now selling. That's why the price is going down. They're selling ETH, right? So again, the liquidity position takes the opposite side of every trade. As those traders are selling ETH, it's my USDG that's buying ETH from the traders. So once the price gets all the way down, I run out of USDG. And I have now 100% ETH in my position. And now the price is down here around 1700. So the value goes down. Okay. The value goes down if the price goes down. That's just the nature of the beast with providing liquidity. So you're not immune to market movements. You're participating in the market. You're providing liquidity here. So you're at the mercy of what the price does. But if the price just goes sideways for a long time, it's a beautiful thing. And it does that a lot. I mean, here it went sideways for almost 2 weeks. Great. Or maybe that's a little bit more than 1 week. But anyway, it was fantastic. So the price basically went nowhere, but I was collecting fees the whole time. And when this shot higher, great. I'm not earning fees. I wasn't actually in a liquidity position there, but as this shot higher, all of my spot assets were increasing in value. So this is the best of both worlds. If the market goes sideways, you're making nice fees and the price is staying inside your range. If the price is going up, it might escape and you might stop earning fees from your LPs, but your spot assets are appreciating value. Now, the third option, what if the price goes down? Now, I did talk about that in a previous video on the channel. Let me close this out. So this is the main one. This tells you how to offset your liquidity position with a hedge, and you can design what's called a delta neutral position. Delta neutral means you don't care if the price goes up or down. You're maintaining the same value. All you care about in that case is the price in your range? Because if it's in your range, even if it's dropping, you're still collecting the fees. And if the price drops a lot and you lose that value on your LP, the hedge is actually making profit. And you can size it such that the profit on your hedge completely offsets the loss on your LP. So I'm not really bearish right now. I'm a believer that the bottom is already in. I called that back on June 11th, I believe it was, on my live stream. And so I think we might go sideways quite a bit, but I don't think we'll be going any lower. If we do go lower, it'll just be, in my opinion, in my belief, it'll just be maybe a little bit lower. So maybe we'll see ETH somewhere in the 1400s. Maybe we'll see Bitcoin somewhere between 55,000 and 58,000, somewhere in that region. But I'm not super bearish right now. Now, back in late November, December, very bearish. I had massive short positions and massive hedge positions, and I was able to actually generate some nice fees and some profits on the way down. But this is the solution if you're worried that the price is going to drop and you don't want that value to get lost. You can offset it. You can offset it with a short position. I also did a live stream, a couple of live streams all about that bearish market. Cash during the crash, get paid while it crashes. So this was a month or two ago when, we were still quite bearish in the community. So yeah, I think that's about all I wanted to cover. Thank you guys so much. 23 live viewers at the moment. That's impressive. It's kind of a record for us. So I'm glad you're all here, and thank you very much. Hope it was helpful, and I will see you next week. I do this live stream every Tuesday. Try to do it at 6 p.m. Ran a little bit late today, but usually 6 p.m. Eastern every Tuesday. So make sure to subscribe, turn on notifications, and I will see you guys next time. Thanks so much. Bye.